Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 31, 2021. 2021 is almost over. I wish you all very happy 2022 and hope you can make very good in the Wall Street. So with that, let's jump in and get started. Today we will talk about top stocks with a heavy short ratio. We'll do a quick market update, look at how market has been doing so far, and then jump into stocks with a heavy short ratio and look at stocks with a positive gross margin and low RSI. As you can see here, we are progressively decreasing number of stocks here and going after quality. And next we'll look at better way to grow your portfolio. We'll look at positive gross margin, positive sales growth and low RSI. These are the better stocks to to do a short squeeze play. And then we look at even better way to grow your portfolio here. Look at positive gross margin, positive sales growth, low RSI and low valuation. And finally, we look at when short ratio meets TTM squeeze, these stocks have to move. They have to move right now, up or down. We will focus on stocks that can go higher quickly. So with that, let's jump in and get started. So to begin with, let's look at market performance in last 5 years. I know everybody is thinking about market performance, what markets will do next year. So we'll look at that in the next segment where we'll talk about how to invest in high inflation environment. But right now we'll quickly wrap up and do a quick market performance in last 5 years. As you can see here, we got May very good performance in SPY, which is S&P 500, 29%. That's a great performance in 2021 by S&P 500. So that's the top major ETF to perform in 2021. And behind that is QQQ here. QQQ has done great. It's a 28.5%. As you might have noticed, toward the end of the year, QQQ started giving back some because of rotation from high growth to some of the value stocks. And then the next sector is a DIA, Dow Jones Industrial Average. As you can scan through here, Dow did around 22% in 2021. That's also pretty good. And weakest segment is IWM, which is small cap stocks. That did not do very well in 2021. So hope this can bounce back in 2022. We'll keep a close eye. And if you contrast that with 2020, this whole piece is 2020. So in 2020, as you can see here, Nasdaq is the master. It did very well, 47%. Typically, when this happens, if Nasdaq goes higher so much here and leaving the other indices in the dust, that's when it settled down the following year. That's what is happening here. Whereas bigger index like SPY, that took some slack here and did nicely. And as you look through here, even DIA, it was very muted back in 2020, but it tried to do better. So that's what is going on here. Whatever is strong in the previous year, it starts getting weaker in following year, as you can see in the trend here. And next we look at 2019. As you can look through here, this is 2019. 2019 also, as you can see here, technology did great, 37% improvement. And then we have SPY, 28%. And DIA and IWM. So in 2019, even IWM, which is small cap stocks, it also performed nicely, as you can see here. Now we are into high inflation environment. That's 2018. As you might be knowing, our friend Jerome Powell, he increased the rates by at least I think 3 times or so. Stock market did not like it, so we got SPY down 6.2%. Tech heavy Nasdaq, tech and biotech heavy Nasdaq, it did pretty well. As you can see here, it's down, but not too much down, just 1% down. And as you look through here, IWM, DIA, Dow Jones Industrial Average, it was down 5.7% in 2018. And the most beaten down was IWM in 2018, down 12.2%. That tells you when the inflation is high, it will hit the low cap stocks especially with high debt ratio. So we have to pick good stocks with a low debt ratio and low valuation. That's the rotation which is going on here. As you can see here, rotation out from these low tech stocks into higher tech names here, and even rotation from SQQQ and technology into other names here. That's what's going on here, and trends will continue. As you think about investing in 2022, look at the stocks with a great balance sheet, great financials, not too much debt, and growing profits. That's what we have to look for. That's the strongest way to invest. And also look at the companies with the nice pricing power. They can increase the price despite of challenging environment. Those are the companies which will grow. We'll cover some of them in the next segment, and in little more detail, and go from there. And as you look through here, we got 2017 here. In 2017 also, as you can see here, we got technology doing nicely, 31% growth in technology, followed by DIA, Dow Jones Industrial, and I think followed by here we got SPY. So as you can see here, consistently we have Nasdaq doing nicely. Look here, did nicely in 2020, did nicely in 2019, did nicely in 2017. 2018 also not too bad. Even though it's down, it's did not do as bad as other ETFs. And 2021 also not too bad. Even after the rotation out of high growth names, Nasdaq did pretty well. QQQ did pretty well. The gist here is really don't worry too much about all this inflation. Go after the quality stocks here with the low debt ratio and low debt on the balance sheet, and look at the profitable companies with the pricing power. You will do just great. And as some of these good stocks go down, even QQQ for that matter, buy selectively, buy slowly, so that way you kind of dollar cost average. That's the best way of investing. Especially if you're not an active investor, go after indices like QQQ, SMH. As they get battered, slowly buy them, and accumulate. That's the best way to invest, and go from there. So with that, let's jump in and look at a few more things here. So now I also want to quickly share the sector performance here in 2021. Look, there is no surprise here. We have energy with the oil exploration did great here. Nice performance. So that's a great one here. That's the number one performance, which is oil. And number two is energy. As you can see here, energy also did very, very, very well. Mainly because it's coming off of a 2020 where both of these segments were depressed pretty much. That's why they did great. And next we got here XHB, actually XLRE, which is real estate. Think about all your favorite REITs like Crown Castle, AMT, and some of these stocks, they did very well. And then you got XHB here, home builders. They also did very well in 2021. And financials did great, as you can see here, 37%, followed by technology, 36%. And on the weaker side, we got here XLI. Actually, before you go to XLI, the weakest one was consumer staples here. In 2020, consumer staples did very well. Everybody nested at home. They bought a lot of these consumer staples. But 2021 markets got opened up. Economy opened up. That's why XLP kind of gave it back in 2021. And XLC got battered, as you can see here. All your favorite companies like Facebook, like Snapchat, they all get clobbered because of Apple's game-changing privacy rules. That's why all this communication sector got battered. Even some of these utilities like AT&T and Verizon did not help too much there. And then finally, we got here Xlu Utilities. Utilities also did not do well in 2021. It's at 20%. It's okay, but not too great. I think what you can expect going forward is some of these sectors which did not do well. Utilities, XLP, which is consumer staples, and even XLC, and XLI, those can do well as you go forward. And sectors like XLK, which is technology, they're going to be steady eddies as we go forward. They will do well. Trick is to buy them as they get sold off slowly, and no rushing in and buying a huge quantity. So with that, let's jump in here and look at a few more things here. We'll look at a quick stock news here and see what's going on in the stock market here. From a stock news perspective, S&P 500 did great here. On the last day, it did not change much and wrapped up a nice year of gains here. It's the top index or a top major index in 2021. And then you got your small caps. Prediction is small caps are not going to improve too much, in 2022, according to this, news item here, because some of these companies have got high debt level, and they don't have too much presence on the web. Their e-commerce is a little bit slow or a low. That's why expect some more beatings in the small cap as you go forward. And as you see here, we have to look at some of these federal policies and see what's going on as Fed increase their rates. Even these small cap stocks might get a little bit battered more. So we'll keep a close watch there. So with that, let's jump in and look at a few more items here and go from there. So from a stock news perspective, as you can see here, we got Beyond Meat here. Beyond Meat, as you can see here, it fell more than 1%. After Impossible Foods announced launch of new chicken meat here. So right now you got to be careful. If you want to buy a little bit at a time, it's okay, but don't buy a huge quantity in Beyond Meat, because right now Beyond Meat is struggling with their supply chain issues. We'll keep a close watch on that. And we got Blink Charging here, as you can see here. Blink Charging, they are going to be unveiling 7 new charging products here. That's a good news here. The stock is battered down here big time. I think it's a good one to slowly acquire and go from there. And then we got here cyber security stocks here. We got here Sentinel and CrowdStrike. Both can be you can buy and hold and keep it for next decade here. I think both are good place here. Sentinel especially, stock is sold off completely here. You could buy some Sentinel at these levels here. Given there is a high short ratio, you can expect a nice short squeeze also. And then you got here Chewy. Chewy used to be the undisputed king back in 2020. Everybody ordered dog food and pet food from home, but now it's in a dog house, as you can see here. So they're also jumping into pet insurance, as you can see here. I think that this can help them a little bit to overcome their supply chain issues. We'll watch that out. I think at this time it's good to buy some Chewy slowly and go from there. They're going to improve as you go forward. Then we got electric vehicles here. They got nice electrification here because commercial truck industry is really not doing great with the high energy cost, truck driver shortage. That's why these companies are doing nicely here. We'll keep a close watch. I think at this time it may be okay to slowly buy some. I think many of you might be having some of these stocks here because these were some of these short squeeze candidates. If you do have it, just hold on to them. I think they will have a nice squeeze as you go forward. Then we got crypto stocks here. All crypto stocks got battered. As you can see here, we got top crypto mining stocks for 2022. That's the Btbt, Bit Digital. I like this company. I'd been buying some Btbt as it got battered down. I think this will do well. I'm also buying stocks like RIOT Blockchain, Marathon Digital. As they come down, those will also work. And finally, we got Coinbase, which is also a good one. You could slowly buy that also into the weakness. And then we got here 3 reasons to sell AMC stock here. From this Motley Fool article here, their balance sheet, the stock is expensive, declining industry, nobody wants to go to movie theater, and fragile balance sheet. I think all good items here. There may be some short squeeze here and there, but company has to basically address their issue around high debt load on the balance sheet and go from there. And then we got here some funds are buying stocks here in Datadog, Ford, GoodRx, and GoodRx has got high short ratio, as you might have noticed. And also we got Snap here. Even though this fund sells Snap, I'm slowly buying Snap. It's a good one. I think they will do well as we go forward. So with that, let's jump in here and look at a few more things. So let's now look at stocks with a heavy short ratio and volume greater than 1 million shares traded. So here we are not looking at any other criteria. We are purely looking by volume greater than 1 million shares and heavy short ratio. I know many of you want to just look at the list here. That's why I put the list here. We'll progressively go after better candidates here. The first list here is a list of all the stocks with volume greater than 1 million and a nice short ratio. As you can see here, I will quickly touch on few things here to give you some idea what I will be looking at, and then you can follow along. Look, we got STRN here, which is a Strawn and Company. Stocks like this typically, I don't trade them too much. The main reason is, look at here. I look at this institutional ownership very closely here. If the institutional ownership is 0% here, that tells you all these big hedge funds, they're not buying this company. That's why, stocks like this, you got to be a little bit careful. Even though there is a quick bump here or a short squeeze in 1 month, be careful. No need to jump into stocks like this. Even though there is a gross margin here, I would typically shy away from low ownership stocks here and go after a little bit higher ownership stocks. And same thing applies to LGVN here, very low ownership, 9%. You would rather go after a little bit higher ownership names here. So with that, if you look at ISIG here, this one is a little better candidate. As you can see here, it's got around 23% ownership by these big funds here, and this has been going higher, as you can see here, in 1 day, 5 day, 1 month. So that's why I would not jump into this one right now. Given RSI is high, I like to buy these short squeeze candidates when the RSI is low, not when RSI is high. And in the same token, I would be avoiding BFRI. Main reason is, look, there is no institutional support here. That's why I would be avoiding it. And look, if you look at the gross margin, there's a good gross margin here, but there is no institutional support here. But if you're a completely contrarian, you could look at this one. Given RSI is around 54, you could wait for this to come below 50 from an RSI perspective. You could then buy. But I look at this institutional ownership here. If I don't see anything here, I would probably pass on that stock here. And then we got Crtx here. This is a good one. I've been buying this slowly into this downturn here. As you can see here, it does not have a gross margin here, so you got to be a little bit contrarian to buy this. The fundamentals are not there. And look here, there is no sales, so you have to be a contrarian here. You have to basically believe in the company and its pipeline and buy this company. There is no other reason here. There is no fundamental reasons to buy this company at this time. So you can look at this list here. I will not be touching on all the stocks here. We'll progressively go after good candidates and we'll talk about them at the time. So with that, this is list number 1 here. And next we got list number 2 here. Follow the same principles here. Also, pay close attention. I love to always look at what institutions are doing, what insiders are doing. If institutions and insiders are buying, then it's a good story. Look, we got stocks, some of these stocks here with nice institutional support here. And if the RSI is low, when there is a good institutional support, you could buy some. As an example, EEFI here, this one does not have, as you can look through here, even though volume is high here, it's having a short squeeze. EEFI has got a high debt to equity ratio here and a high RSI. I would not buy this at this time here. Instead, I would wait for a stock to cool off a little bit, given it's a very low market cap stock here. And also, as you look through here, institutional ownership is around 8%, which is not too bad, but I would wait for a little pullback here. Given it had a nice short squeeze already, no point in jumping at this time here. And one of my favorite is the Btbt here. I think it's a good one to buy slowly and accumulate. Given RSI is low, just 54, as you can see here. And we got a few more as you can look through here. As usual, keep watching high institution buy or a high insider buy here. As you see here, we got AMC. Looks like a lot of institutions are buying AMC here. Right now, RSI is low here, 42. and stock is trying to make its move higher here. So if you're a contrarian, you could buy some AMC given there is a low RSI, and institution ownership is around 32%, which is not too bad. You could jump into it. Understand, they got high debt to equity here. Look, AMC here, it's got right now debt to equity ratio is not showing up here. I know this company's got a lot of debt on their balance sheet. And then we got a few more. As you can scan through here, we'll take a look at a few of these things as we go into detail. And next we got one more list here. I will let you scan through this in your leisure. I want to just have all these three top short ratio candidates for you to take a look at. And what we'll do now is we'll progressively whittle down this list and go after better candidates. And next list is really to grow your portfolio safely. We'll focus on positive gross margin, low RSI, and high volume stocks. Positive gross margin means companies are running efficiently in their operations. Low RSI means stock is sold off here, has a good chance to bounce, and volume is greater than 1 million, tells you it's a liquid stock, you can trade in and out. So with that, let's look at those candidates here. So as you can scan through here, we got nice candidates here. I would, like we talked about, I would look at institution ownership also. If it's very low, I would pass that one here, like LGV on here. Unless you're a contrarian, you could pass up this one here and go from there. Look, it's got a nice 3-month and a 6-month performance here, but institutional ownership is very, very low here. And it's got a $2 million in sales. Unless you're a contrarian, you could pass this up here and go from there. And we got a few more here. I like to look at stocks like Blink here. Blink is a good one. It's into EV charging, as many of you know here. Look, it's got a low RSI, which is just 33 here. And right now, fundamentals are not there, as you can see here. It's a really electrification of this trucks. That's the main thing here, and charging stations. I think with the theme, this stock can do well. And I would be avoiding this Chinese stock here, RLX. I'm not too much into tobacco type stocks here. With that, probably it's good to pass this up here. I've seen this company doing stock moves here and there, but probably best to avoid it at this time. It's a Chinese name. And then you got a few more. Focus on candidates like Weibo. Weibo, even though it's a Chinese name here, look at the nice fundamentals here. It's got nice 1 year quarter-over-quarter sales, nice gross margin, companies making money, net margin positive. And off late, Weibo is trying to go higher, as you can see here. So even up here with the RSI just 28, I'm buying Weibo slowly and going from there. And we got Sentinel, one of my favorite here. You could take a look at Sentinel. It's a great long-term play here. Squeeze or not, it's a great cyber security stock. I'm a buyer of Sentinel and accumulating it for the long haul. And we got a few more as you can scan through here. You can follow the same methodology. I love stocks like Btbt. It's a good one. You could buy that one too. As usual, keep watching insider and institution buy here. Few stocks here are doing nice insider buy, like Sentinel. That's a good one. You got BZ here, nice institution buy here. Beyond Meat, institutions are warming up, as you can see here. And as you scan through here, we got few more. The key is to look at some of these names here. All these names have got low RSI, below 50, and nice gross margin. You could look at catalysts like insider buying or institution buying and buy along with them. So with that, what we'll do is also keep watching the debt to equity ratio. If it is high, like Beyond Meat here, be careful. Next year, as inflation goes higher, as Fed ratchets up the rate, stocks like Beyond Meat with the high debt to equity ratio, they will have tough time paying down their debt. So that's why you got to be careful on these high debt candidates like Beyond Meat, and even like Smile Direct here. Again, high debt ratio, as you can see here, 3.9. Avoid such stocks here. Even Chewy, for that matter, they took so much debt here. If you have debt, it will give you nice growth, but as times are difficult, that will come to haunt you because you have too much debt on the balance sheet. So I would avoid such names here. You can look at few names with a high debt to equity ratio. Try to avoid them. As we go forward, as we shortlist the candidates, we will ignore some of these high debt candidates. So with that, what we'll do is we'll look at a few more names here. This is list 2 here, continuation from previous theme. You could take a look at this also. I love stocks, some of these names here. I love AI, C3 AI. It's a good one. I think it's time now to slowly start buying C3 AI. It's also trying to go slightly higher, as you can see here. And skills, I know many of you have skills stock here. It's around $7 right now. And as you can scan through skills here, it's trying to go higher in the shorter term here. You could slowly buy some at these levels. I know Cathy Wood also has a lot of skills stock here. But as you can see here, they got 1 year sales growth, and they also have nice gross margin here. Quarter over quarter sales growth is not there yet, but I think it's okay, given they got 1 year sales growth here and nice gross margin and very low debt. You could hang on to it. And as you can scan through, we got few more names here. Look at some of these names. Pay attention to what insiders are doing and what institutions are doing, and go from there. So with that, we'll jump in here, look at the next list, and go from there. All right, this is again a continuation here from the previous list here. Again, stocks with a heavy short ratio, positive gross margin, and low RSI. As usual, keep watching what institutions are doing, what insiders are doing, and go after where there's a nice institution and insider buy. Look, Sorrento finally looks like institutions are buying it. Sorrento is slowly trying to make some move here. As you can see here, 1 day 0.6. And also look here, volume is picking up in Sorrento in 1 day. It's green means volume is more than 1.5 times normal 3-month average. That's a good indication here. So then we got a few more names here like DLGY and DOCN. Both have got nice institution support here. Institutions are buying it. That's a good sign here. And Stitch Fix is also a good one here after getting clobbered for a while here. Slowly trying to make a move, as you can see here. And we got here Asana. Asana also has a nice insider buying here. This stock has struggled a lot of late. Now slowly trying to make a move here, up 6.2%. And this one has got debt to equity of 1, which is manageable. I think companies paying down the debt as we speak. So with that, we'll look at next list here, which is again a continuation, and go from there. So this is a better way to grow portfolio. I look at this list very, very carefully. These stocks have got positive sales growth, positive gross margin, low RSI, meaning stock is sold off here, and volume is greater than 1 million shares, and low valuation. So that this is a better list to look at, and go from there. And this is the list of stocks here with that criteria that we talked about here. Look here, all these stocks have got nice low RSI here, as you can scan through here, and also they have they got a positive gross margin and positive sales growth, and also low RSI. So it's a better candidate here, given both sales growth is positive, gross margin is positive, and low RSI. So with that, you can look at this list here. I love stocks like Btbt, like we talked about earlier. And you could also look at other names here. Shift4 is a good one here. You could look at that one too. Good RX is also a good one here. You could look at that one too. And what we'll do next is we'll look at even shortening this list here. In this list, as you see here, we got some of the names with a high debt ratio here. I would be, I would not be investing too much in those names like Beyond Meat, Crtx, and even Chewy for that matter. And then in the next list, we'll whittle this down and go after the stocks with a low debt to equity and high short ratio here. So with that, let's look at continuation here. Few more names in the same category here with the positive sales growth, positive gross margin, and low RSI. And as you can scan through here, many keep watching what insiders are doing, what institutions are doing here. And names like REI Ring Energy here looks like there is a nice institution and insider buying, but stock, stock is slowly trying to not doing much, as you can see here. It's trying to go higher in 10-day. You could take a look at this one also. It's got a nice sales growth and gross margin, as you can see here. Only issue is it got a little bit high debt to equity ratio here. And you can look at a few more names here and go from there. And what we'll do is we'll go after even stronger candidates here. Continuation, one more list here. You could take a look at some of these names. I love names like TLRY and even DDD, which is 3D systems. I think that's also a good one here. And you could also look at Chinese names. Even Lee makes news once in a while. It's a better company from an EV perspective in China here. It's got a high short ratio. Look, there is some positive sales growth and gross margin. I believe some of the stronger Chinese companies can survive, and they will slowly start going higher at this time here. Lee has got low RSI. You could still buy some Lee at these levels here. And as usual, keep watching what insiders are doing and what institutions are doing. All these companies are great here. You could buy them slowly into this weakness. Stocks like PDD and Billy both got clobbered, as you can see here. I like both of those names here. You could slowly jump in and buy. Even though everybody says don't buy Chinese names, the stronger names, you could buy them slowly. No need to buy in a huge quantity. You could buy slowly and take it from there. So with that, what we'll do is we'll look at next list here and look at stronger candidates. So next list is the one I always look closely and buy from this list here. These companies, as you can see here, they got positive sales growth, positive gross margin, low debt, very important, especially in this environment that we are in right now with the high debt ratio, high inflation rate. I think it's very good to have low debt on the balance sheet. That's why I like this list here. And low RSI means stock is sold off here. That's also a good one here. And low valuation and volume is good. So I look at this list closely. This is the better list to go after if you want to have a nice short squeeze type situation. So with that, let's jump in here and look at this list, which is close to my heart. So as you look through here, we got a few candidates here, and keep watching what insiders are doing, what institutions are doing here, and we can look at those and go from there. All right, so we got here insider and institution buying here, and keep watching here. We got nice institution buying in VNTR here, just a $4 company, and many of you I know, you may not want to trade stocks less than $10. You could ignore those, but for the folks who want to have a short squeeze for low price stocks, go after better candidates like this one here. Look, there is a nice sales growth here and nice gross margin. Not great, but it's okay. Positive gross margin here, low debt to equity ratio here, low RSI. You could take advantage. As you can see here, this stock is already having a small short squeeze playing out here. You could go after such candidates here and go from there. And next we got Btbt here, one of my favorite. You could slowly buy into this one also and take advantage of this high short situation here and go from there. And all these names work here. Look at China data here. China data also, it's from China as the name suggests here. It's also having a short squeeze as we speak here. Better run company with nice sales growth and gross margin and low debt to equity ratio. I believe some of these Chinese names can go higher in 2021 as situation improves. And we got here RIOT blockchain, one of my favorite name here. You could buy that one also here and go from there. This one is also trying to make a small move here, as you can see here. We could buy that one too. And this is a better list, as you can see here. All these names have got low debt here. That's the one thing I like the most about. And also nice volume, more than 1 million shares traded. And some of them have got positive, more than double normal volume, especially FT here, future fintech. You got to be careful here. It's gone up so much in last few days here. You could be a little bit careful. Don't buy at this time. Even though RSI is 45 here, because it's gone so much in a very short time, I would probably wait a little bit and then go from there. And all these names are good here. Look, LTHM Livent, one of my favorite stock here. You could look at that one too here. It's down at this time here. Nice sales growth and gross margin. This is the list I look at to do short squeeze type play here. Look at DDD and TLRY. Both of them work here. Both of them are trying to go higher in last Friday. That tells you turnaround maybe around the corner. So with that, let's jump in here and look at a few more names. So we got few more names here. Normally this list is just one page. This time with the market, turbulent, we got two pages here. As you look through, we got few more names. I like, Lee also is a good here. Chinese EV play. You could buy this one also into this uptick here. Low RSI and as you can see here, low debt equity ratio, low debt on the balance sheet. And you could look at, PAGS is a good one here. You could buy that one too here. It's a Brazilian play on payments and e-commerce. It's also trying to go higher, as you can see here, in 1 day, 5 day, 10 day. And you could look at few more names here like DCPH, which is also trying to go higher. On this one though, it's gone up so much in last 1 month. It's a beaten down stock here. You could wait for this to cool off a little bit and then buy this one. So with that, let's look at next list here. Next list is where short ratio meets TTM squeeze. These stocks have to move. They have to move fast. So this is where we got high short ratio, which is a good candidate for a short squeeze. And then you got a short squeeze indicator from John Carter. They got a squeeze in 1 day, 3 day, 1 week, or 1 month. And low gross margin, we like it. Low RSI tells the stock is sold off here. Low volume tells you it's a very liquid stock. So let's look at that list here and go from there. As you look through here, this is a short list of such names, with the heavy short ratio and TTM squeeze. And keep watching here. We got TTM squeeze from John Carter here. All these stocks have got a squeeze either in 1 day, or this is 1 day, this is 3 day here, and that's 1 week and 1 month. My label is a little bit off here. It's basically daily squeeze, 3 day squeeze, weekly squeeze, and a monthly squeeze here. So all these names work here. What I would typically look in this list is look at the stocks that are doing well in the near term here, like like 1 day, 3 day type time frame here, and go after those candidates and go from there. So let's do one thing. Looks like my heading is a little bit off here. Let me fix that quickly and go from there. So let's cut this heading off and get heading from this here. All right. All right, so let's work with this for now here, and I think heading is a little bit off, but we can make it work and go from there. As you look through here, this is the list with the shorts squeeze type candidates here, and keep watching. The things that you see here, 1 day, 5 day. I think 1 day, 5 day will start from here. This is a 1 day, 5 day. Heading is a little bit off. I look at stocks which are doing well in 1 day, 5 day, and a squeeze type situation here. For example, if you look at this one here, Lee Auto, it's already trying to go higher in 1 day, 1 day, 5 day here, and even 10 day, and there's a squeeze. You could take advantage of that and buy stocks like Lee here, and you could also buy stocks like PAGS, same situation here, going up in 1 day, 5 day, 10 day, and even 1 month here, and a squeeze. And if there is a squeeze here, we got a weekly squeeze on this one here, which is a car auction. Car auction, I think it's also a good one here. It's got nice sales, as you can see here. Because sales growth is negative, I would not probably go after that one here. So this is a good list to look at. The moment you see a squeeze indicated by this Y here, and look at the shorter term, 1 day, 5 day, 10 day, if you see some positive growth here, not explosive growth like this one VFC here, that tells it's already had its day in the sun. but if there's a little bit improvement here, you could go after such candidates here and go after such names and go from there. So with that, thank you very much. Happy investing and trading. As usual, look at some of these criterias. I always look at the entry point criteria indicated by RSI, and also look at growth here, rule of 40 here, quarter over quarter sales growth and gross margin, greater than 40% or at least positive for that matter. Also look for nice institutional ownership that tells you stock is bought by these big institutions and even hedge funds. As you go forward, also look for low debt here, indicated by debt to equity ratio, and also look for catalysts like insider buying, institution buying, that will tell you, these stocks can go higher with a higher short ratio. So with that, thank you very much. Happy investing and trading. Please subscribe.